Welcome back to the Christian Capitalist Podcast, everybody. I'm so glad to be joined by my friend Jeff Taylor, an accountant in Atlanta today. Good morning, Jeff.
Good morning. How are you?
I'm great. Thank you. It's good to see you. And everybody, thank you for joining us today. As you know, the Christian Capitalist Podcast is all about the more we make, the more we give. And so we would love for you to like, share, and follow this episode on social media, as well as all the various places you can get these podcasts, including iTunes, Spotify, and YouTube. But just as well, you can follow us on our website at christiancapitalist.life. But we have important business to discuss regarding taxation. And before you hang up the phone, turn off the computer, or otherwise swipe to get off of this, I wanted to ask Jeff to join us today because there is some very time-sensitive information for folks regarding income taxes, specifically in 2025, that we're going to get to. But first, Jeff, how are you doing this morning?
I'm doing pretty well. It's a cold day here in Atlanta, but it's supposed to warm up in the next few days, but I'm still doing great.
Well, good. Yeah, I was stunned. We had this Indian summer, and then all of a sudden, our son that lives in Atlanta was showing us pictures of snowflakes yesterday. You couldn't believe it. That is cold. We went from summer to winter overnight. And so, speaking of which, since the last time you joined us last fall on the Christian Capitalist, since then we've had some major taxes. Changes to tax policy, but want to just start out and see how your business going. Tell everybody a little bit about what you do and how you assist folks with their income tax.
Sure. I provide some tax services and accounting services to small businesses and individuals. I also do a little bit of tax planning and tax strategy planning. You know, many times with taxes, we look back. But with tax planning, you'd look forward and say, okay, this is how, in this particular case, 2026 and 2027 look. And what can we do now to minimize our taxes in those years? Of course, all legal, all strategies that the IRS would be more than happy with. But there are sometimes little changes, little things we can do to save taxes in the future. So we try to save taxes in the past based on what has already happened, but it just important to do tax strategies for the future.
I love that. And look ahead. And tax strategy is not just, hey, I need a new shoebox for receipts next year.
Right. Yes, awesome. It's much more than that. Looking at what you're planning to do for your business in the future, as well as have a good shoebox.
So, Jeff, it seems like as a small business owner and an entrepreneur, and many of our listeners and viewers are in that same boat, small business owners and entrepreneurs. It seems like there's kind of a double responsibility there because you got to plan not only for your individual taxation, but for your companies as well. Do you find that many of the individuals you represent are also bringing their business work to you, or do people kind of keep them split?
No, they usually bring both to me. So we can talk about it. And that's really important, of course, with tax planning, just bringing it all together. Sometimes companies don't know how an S corporation relates to their personal tax return. So we need to explain that and keep that together.
Well, and that's a perfect segue. I was just going to ask you, for many small business owners, they're already familiar with the distinction between an S Corp and a C Corp. But for those who are maybe not familiar with that, or we just had a big conference here in Destin last month that my friend Chris Cumby put on, called the Level Up Conference, which was both. It was for the Christian Capitalist. It was right up our alley. It was a business conference focused on entrepreneurship, held at a church. So wow. we love that kind of stuff. But many of the folks in that room were entrepreneurs. The rest were employed by someone else and thinking of starting their own business. So kind of at the foundational level, would you explain the different types of way that businesses can be taxed? Because it seems like if you're representing business owners and businesses, that's an important kind of thing to nail down from day one.
Yeah, I'll go over just four of them. There are more than this, but the four ones that are most commonly used is a sole proprietorship, which means you file your taxes on Schedule C on your personal tax return. Then there's also a partnership where you and someone else go into business together. There's also an S corporation, which gets you into having a corporation set up with shareholders. And then there's also a C corporation, where you are also in a situation where you have other shareholders. The difference between an S corporation and a C corporation is with a C corporation, the company, pays taxes, pays income taxes.
Hmm.
With an S corporation does not pay income taxes. But what happens is the profit or loss from the S corporation flows through to your personal tax return. So if you have a profit of $10,000 on an S corporation, you'll file that tax return. You won't send any money with it, but then you'll take that $10,000 with a Schedule K-1 and put it on your personal tax return. And that's where that income is reported.
Gotcha.
And in my tax strategy sessions, we look at what is the best formation strategy for you, because there are some instances where you can save more money as a C corporation and some instances where you can save more money as an S corporation, also versus a sole proprietorship.
Gotcha. Jeff, it's a kind of a niche question that applies to your host, but one that other folks may be interested in hearing. Unless your name is Joe Rogan, the podcast business isn't very lucrative. So when you have an S corp like that and you have a loss, does that loss also pass through to your individual taxation? In other words, if you have a business that isn't quite making money yet, can you save on your income taxes?
Yes. And in fact, the S corporation strategy is a really good strategy when you're starting a business, because usually in the first few years, you're going to have some losses, depending on what type of business it is. But many times the first few years, you're losing money. And so you can take those losses and offset other income that you might have. So
Gotcha.
That's definitely that the losses can pass through also.
All right, that's great. That's great. But hopefully everybody who has an S corp and is listening to this is either going to start making money right off the bat or has gone through those early years. So Jeff, since one of the reasons I wanted to speak with you here in mid-November of 25 is that Congress changed a number of tax laws with the One Big Beautiful Bill back in July. Did any of them relate to that corporate tax level that you were talking about on the C corps or on the way S corps work? Is there anything we need to cover in relation to business taxation from the recent change in the law?
Yeah, there are some changes that impacted S corporations, C corporations, partnerships, and sole proprietorships.
Oh, wow. Across the board. Okay.
Across the board, yeah. And some of them are very nuanced. And so the best thing there to do is just, of course, as you'll hear me say many times in this podcast, make sure you talk to your personal CPA, your business CPA,
Yes.
because sometimes things on the surface may look one way, but when we get down to your specific situation, it could be totally different. I always like to give the example of if you and I both go to the doctor, let's say you have knee pain and I have knee pain. When I go, they can say, hey, it's a torn meniscus. When you go, it could be you got an ACL. We both have a sore knee, but we have different diagnoses. And so it's definitely important to make sure that you talk to your CPA, your tax preparer about some of these changes.
Absolutely. And so two things about that, Jeff. Thank you. That's perfect timing before we go any further. The first is Jeff is the guest on our podcast today, and nothing that you hear from him should be construed as accounting advice for you or your business. Did I say that in my lawyerly asterisk voice well enough?
I couldn't say it better. I've got to learn that language myself because I'm not a lawyer.
Well, because when I was a lawyer and I used to stand in front of a crowded room talking about things like Medicare fraud, compliance, and Stark, I would have to say the same thing. Don't anybody leave here and go to do something that I said, because you're right. Every experience is individual. Plus, second thing, for those who don't have an accountant, we're going to make sure we include all your information in the show notes for today's episode. And of course, collaborate with you on social media so people can reach out and ask you the questions if they want to hire you as their accountant. Jeff, just before we move off of corporate taxation, for those who are listening to our episode today and are thinking about starting a small business, just again, big picture, did you hear anything or read anything about the changes in the law that would encourage someone to go C Corp, S Corp, solo, or partnership right off the bat? Like, if someone says, hey, Jeff, I'm interested in starting a widget business in 2025, is there any kind of clear line now that you think they should follow with this recent set of changes? Or is that still go talk to your accountant?
It's still go talk to your accountant and tax planner. Like I said, many of these changes, and we'll go over some of them today, are sort of nuanced. They don't really impact. They impact the big picture in that they'll save you on your taxes. But again, so many things are different from one business to the next. So there's no one clear anything that I've seen that says, okay, now everybody should do an S corporation, or now everybody should do an LLC.
Right. So along that line, 2025 has been a terrific year, and really a continuation of 24 for entrepreneurs. Many people are, many more really than ever in American history, are starting new businesses. I think primarily because of our climate. That in America these days, people are more entrepreneurial than ever before because they see the opportunities for growth as a small business owner. But two, the technology. I mean, I don't want to lose sight of the fact that you and I have been good friends for 20 years, but we're visiting today like we're in the same room because of computer and internet and software technology that really is landmark, in American history. What have you seen in your perspective as an accountant in terms of people starting new businesses? Or is that continuing to grow like I'm seeing from my perspective? And are you seeing kind of entrepreneurs kind of grow as a demographic?
I have definitely seen that. A lot of people I talk to really want to be their own boss. Now you have some people that want to just, work and stay in a box and just draw a salary from that. Mm-hmm. But I think people enjoy the independence of running your own business. And sometimes now they say they are their own boss, or they don't have any bosses, but your customers are always going to be your boss.
Exactly.
Always good to keep that in mind, but I still see the entrepreneurial spirit continuing to grow and expand, and people trying different things, particularly with, like you just said, AI and technologies so evolving so fast that people are looking at different opportunities to really expand and grow. So I see it continuing.
I just love it. And I got to say, even 15 years ago when I started Southern Health Lawyers, it was amazing that I could do that without a significant investment in what lawyers used to have to do back when I started off in the early 90s. I didn't have to buy a library. I didn't have to buy a bunch of typewriters. I didn't have to phone system, all of these things that now really with a phone and a laptop and internet connection, you can start a business. It's pretty cool. So, and I think there's some theology behind that. We talked about this in the episode that you appeared on early last fall. But we know from the very first part of Genesis, the very first verses, that God worked to create the heavens and the earth, and then, of course, made us. And since we're made in His image, the Christian capitalist principle is we're made to work. And I think people really find gratification in working for themselves. What do you think?
I think so. And also, just to follow up on that, unfortunately, when Adam and Eve left the Garden of Eden, God told them, you're going to have to work.
Exactly. You had a free ride, but you messed up a good thing.
Right. So I think work is something that we all need to do I think it's very satisfying. I think it gives us a sense of accomplishment. I know if I have a couple of days even on vacation and I'm not doing much, trying to get away from the computer, I start to get bored.
Yeah, exactly. Well, and Jeff, it's funny you say that because that's an interesting thing. I'd like to kind of ask you to speak about the film negative version of that. What have you noticed? Because you've been in business a long time and you're a leader in different kinds of businesses. What have you noticed in the flip side of that coin about people who don't work over long periods of time, and how their kind of satisfaction with life is compared to those who are hardworking and maybe, short of workaholic, right? But those who are hardworking compared to those who have long periods of time where they're not working?
It's interesting. There's a couple of aspects of that. First of all, with the advent of social media, you find people who are not working will spend more time on their computers and on social media. Mm-hmm. And I think that's had a negative mental health impact to our population. Also, I remember as I was coming up through the last 20, 30 years, if I was dealing with a personal problem, loss of a loved one or something like that, work was an escape.
Yeah.
Go to work. And, once you took care of the details associated with whatever you're dealing with, going to work kind of reset your mind and put your mind on something else, as opposed to not working and sitting around throughout the day just thinking about that problem. And so I think that those who don't work may tend to, I'm not a doctor, but may tend to have more behavioral health challenges because they don't have anything productive to occupy their minds.
Mm-hmm.
So, I've seen where work has become less important in people's lives.
Mm-hmm.
And I understand the work-life balance. Maybe my generation didn't get that right. So I understand talking
Fair enough.
the work-life balance, but at the same time, I wonder if the pendulum has swung too far the other way in a certain sense. So work is important. It keeps us busy. It keeps our minds busy. And as you mentioned earlier, it is biblical.
Absolutely. Well, and in my experience, for folks who are chronically not working or not working as much as the day allows, as the week allows, there's a certain malaise, a certain kind of despondence. You can just tell that they're not as satisfied because even if what we do as work is fun, there is something to be said for being productive. That's just the way that we're made. What in your experience with that in mind, that's one of the reasons that we entitled the book and the movement, The Christian Capitalist, right? Is that our economy as a capitalist economy encourages us to work, because when you have an economy like socialism, where everybody is expected to do the same, everyone according to their ability, everyone according to their need, then all of a sudden the work or I guess the incentive to work drops like a rock, right? Mm-hmm. Have you had any experience with that or any thoughts on that?
Yeah, I think that we, I like for when I supervise employees, I like for them to be creative and to think outside of the box. And so I think it's very important to know that you're allowed to do that. See, some people don't think that they're allowed to do that. And as we think outside the box, we become more creative, and it enhances the business. It enhances the services that we provide. It enhances our customer service. So that capitalistic thought process, I understand that capitalism is not perfect, but that capitalism thought process, I think, is the secret to success is to United States having the largest economy in the world, even though the next largest economy has 3 or 4 times as many people in it. So that capitalistic thought process, I think, is critical to the success of a nation.
Amen. And I have to say, as you're saying this, from time to time when we experience, when Rebecca and I are traveling and experiencing something new, I will take a moment to reflect on this and say, they're not doing this in Russia or any of the other socialist economies. The most recent example I can think of, our middle son, Will, went to South Carolina and was drafted by the Chicago Cubs in 2023. And so the last couple of years, it's fantastic. The last couple of years, we've gone to spring training to visit him in Phoenix. And Phoenix now has a service that I think is in a couple of other cities, maybe even Atlanta coming soon, if not there already, called Waymo, where it is a self-driving car.
Yep,
and,
I've seen it in Atlanta.
Oh, you have? Okay, good. So Rebecca and I took the leap of faith and left our hotel in a Waymo to go to dinner about 2 miles away. And I literally, Jeff, was sitting in the back. I was like, I think I gotta record this for the Christian Capitalist and literally say, this is what happens in capitalism. It encourages innovation, encourages research and development, and new things like a self-driving car. And boy, that was a leap of faith, but fun, and it got us there safely.
And it's so weird to see those cars going around with no one at the wheel, man.
Exactly. Exactly. But having said that, the notion of our movement is that the capitalist economy and that capitalist structure, because it does encourage that kind of innovation and growth and entrepreneurship, also encourages profit that can be abused. Sure, just like any human system, it can be flawed. But it also encourages, and maybe even the best of the economic systems that are available to us on Earth, encourages us to love our neighbor. Because with more means, we can give, right? And the whole slogan is the more we make, the more we give. So this is a great time to talk about charitable contributions. As a first order of business, today's November 12th, so we're still in the middle of the government shutdown that hopefully will be coming to a conclusion soon. But the news is full of, these days, the news is full of people in need. Food pantries are running low, and we're already running low before the government shutdown, in fairness, which began at the beginning of October. Food pantries were already running low because there seems to be this kind of chronic level of people who are hungry and have food insecurity in the U.S. But now we've got the government shutdown, so it makes it kind of even more pressing. Let's start off with that. In your experience in Atlanta, have you seen that dynamic? I know there are major charitable organizations like the Atlanta Food Bank that are serving folks. But have you seen kind of changes in that dynamic in the last couple of months?
Yes, I think the biggest one is the when someone has a food drive, those lines are long. People lining up to get food, and it's kind of sad to see. And then also, I've heard a lot of people that want to help. They want to give. I mean, recently government furloughs, the SNAP benefits, what's happened in Jamaica and Haiti and Cuba with the storms. People are, standing around saying, how can I help? How can I make a difference? And so I think, I don't have any stats on it, but I feel like the contributions have gone up significantly. And I think, going back to the beginning of time again, we are our brother's keeper. And so, I think that as you so eloquently said, and your theme is, as we earn more, we should give more. And so, I think that's human nature actually to do that. And so, especially when you see these things around us happening. So yeah, you've seen an uptick in that, in healthcare. There will be people who lose healthcare coverage, based on how these negotiations go. And so I expect to see, that there may be increases in uninsured patients, seeking, care. And, as we talked about earlier, before we started the podcast, it impacts people not only in their ability, not only when you talk about whether healthcare is affordable, but also how often they go to the doctor. If you have health insurance, you have a tendency to want to go to get your annual physical. But if you don't have health insurance, there's a tendency only to go if you're sick. And if you set an appointment, by the time the appointment rolls around, if you're feeling better, you just don't go. So fewer people go to the doctor. So I'm concerned about what's going to happen in the healthcare space moving forward. But definitely see things happen at our own church where people are more in need, and those lines are filling up.
Well, so let's, Jeff, I appreciate your comments. You've given me like 50 questions to ask now as follow-ups. The first is, you, as I mentioned to our audience today, which has grown significantly since we started last fall, you were one of our first guests. And I remember you talking about as a boy having your parents encourage you to give. And that now has really become, Jeff, one of our central themes that I talk to people all about. Giving is a habit. It's something that can be taught early, and it's something that you can develop over time. But as you were talking about the different challenges that we, meaning God's children, face, the hurricane in Jamaica, even going back earlier to this year and the floods in the hill country of Texas, going back last year to Hurricane Helene, and now we've got, the interruption in federal funding. How do you as a Christian, well, I go back to the smart aleck lawyer who says, when Jesus is saying, love your neighbor, and Luke says, to justify himself, the lawyer asks, who's my neighbor? And I love it because as a retired lawyer, I love it when Jesus puts lawyers in their place, right? And from that, Jesus tells the Good Samaritan story. So how do you, as someone who loves his neighbor and wants to support others, when you have these moments in time where there are multiple places where you can make a contribution and try to help others, how do you pick? What is that process like?
Yeah, I think, first of all, I have a certain charitable pattern that I've developed over my life, just like you mentioned. And so I think that, and I know that included in that charitable pattern is our are funds that go to disaster relief.
Mm.
Okay.
Mm-hmm.
So just from a consistency standpoint, I want to make sure I maintain that consistency. And then when it comes to choosing places that you can donate, I also recommend that people do their research to make sure that there's someone out there, because there is someone out there who's trying to take advantage of you and get your money.
Yeah.
Right. And
It's sad to say, but you're exactly right.
But it's so true. So if you certainly if you've got through your church, that's always a great place to start. If they've got disaster relief food programs, you can increase your giving there, and that's kind of what I tend to do. But other than that, volunteer. You can volunteer your time because the lines are so long, we need people's time also. And time is part of our stewardship also as Christians. Not only money, but it's how we use our time. So, and that's something where you don't have to necessarily worry about if it's a ripoff or not, because you're going there, you're participating in it, you're seeing the people drive through, and give them exactly what they need. You can even bring food supplies to a drive like that, so that you are contributing directly yourself and you see exactly where it's going. So I think those are some things to consider. And then as the Lord moves you, if you see other agencies out there that you want to support and help, certainly try to, I think there's a tendency to focus on what's in the news now. Mm-hmm. Just like you said, these historical events, I'm sure there are people who have gone through storms in the last year or two who still need assistance.
Right.
So developing some type of consistency, I think, in your giving kind of helps you have confidence in certain organizations. And that way you can always be of help to everyone that you come in contact, or anytime there's a disaster, you're already contributing.
I love that. I never really thought about it that way. Jeff, thank you. First of all, it's a terrific place to be financially and in your life, to be able to give financially. But then to be able to say, okay, as part of that giving, we're going to put a little special amount aside for disasters, because we just know that's the nature of the world, right? I mean, there's always going to be something. I love what you said about how giving is human nature. That is one of our core principles. In the same part of Genesis where we read that God worked and we're made in his image, if we know we're made in his image and we know that he gives, we know we're likewise made to give. That he gave us life and everything we enjoy in creation. He gave freedom to the people of Israel. And of course, gave us his only son, the ultimate gift, so that whoever believes in him may have eternal life. I just love that notion that it's human nature.
Yep. And I think whenever we can, just in our everyday life, whenever we can lend a helping hand to someone, I think it's natural for us to do that. But then the results, you talk about lifting yourself out of depression or something like that, just help someone, and that will make you feel better.
Yes, exactly. It is a blessing to be blessed. It is right. It is a blessing to bless someone else. And, it's funny, Jeff, just as a quick aside, there is a podcast called the Happiness Podcast run by a sociology professor. And I want to say 2 years ago in November, she did this social experiment where there's a group of 30 people and then a separate group of 30 people. Each group was given $50, something like that. Mm-hmm. One group was told, go buy something for yourself. The other group was told, go give to someone else. And then came back and measured the happiness of each group. What do you think happened in that social experiment?
I'm sure that the ones who gave were happier.
Exactly. That was the resounding result. Isn't that cool? Now, what the sociologist didn't kind of take the next step is, why were they happier? There's joy in giving, but why exactly were these folks happier? And of course, you know what our message was? We're made that way. Of course they were happier. I think that just comes with being a follower and knowing that God's got us, and that, sharing like that can bring such joy to us.
Amen.
But sometimes sharing comes with a little administrative issue or two, like charitable contribution deductions. And that's one of the things that I wanted to sit in here as now we've been talking almost half an hour, brother. We got to talk about charitable contribution deductions because we got 6 weeks left in the year. Many folks, including the Sanders family, give at the end of the year, just because we realize, oh man, we needed to do this, we needed to do that. We set it out as a plan in January to give more regularly, but now all of a sudden we got 6 weeks left, and lo and behold, we need to do more. But the rules have changed a little bit because of the tax law changes in July. So let's start with a couple of basic issues, like what exactly are not just the new rules for charitable contributions, but what are they based on? You mentioned adjusted gross income and that kind of thing. Let's do a little education for our audience.
That's right. Again, sometimes you have conversations and you're used to all the acronyms, but other people don't know what you're talking about. So the first thing, just real quick, AGI is adjusted gross income, and we're going to talk about that in just a few minutes as how it applies to charitable contributions. But AGI is adjusted gross income, and it basically is how much money you make. So, but now to break it down even further, if you receive a W-2 income from a job, usually that's your adjusted gross income. But if you have dividend income or interest income or income from a side business, that may increase your adjusted gross income. But at the end of the day, adjusted gross income is just how much you make. And then we want to distinguish between a standard deduction and an itemized deduction. A standard deduction, everyone is eligible for standard deductions. And for individuals, it's $16,000. For married couples, it's $32,000 per year. And if you have deductions that exceed those numbers, then you can itemize. So if you look at interest on your home, property taxes, charitable contributions, which is a big one we're talking about now, state income taxes that you paid, if those things, as well as some other smaller ones, add up to more than that $16,000 or that $32,000, then you can itemize your deductions. And so I think it's important just to understand those basic things as we kind of delve into discussing how these new tax rules actually work.
Jeff, that's a great point. As an accountant who represents individuals and small business owners, do the majority of people who come to see an accountant in the first place itemize?
Yeah, I would say if you're looking across broadly the nation, most people are going to be standard deduction. Of course, as your income increases, then you put yourself into a position to itemize. And even I think itemization may have decreased a little bit in the last few years because of the SALT tax limitations. Well, that's a whole other subject, but the SALT limitations, as well as because the standard deduction has increased significantly over the last few years. So I would say most Americans throughout the country probably utilize the standard deduction more than the itemized deductions.
This is getting, my family originally is from Alabama. This is an Alabama phrase, but I'll go ahead and use it. We're getting into the tall grass now. This is this is detailed, but important because we have so many entrepreneurs who are paying attention to this podcast. Do most entrepreneurs who own their own businesses itemize just because of the nature of that?
Oh, yes.
Yeah, that seems to make sense based on what you just said, because there is so much kind of expense to starting your own business. It makes sense if you're going to allocate for all of that you would itemize too.
Correct.
Yeah, that's great. Okay, so with that in mind then, for those, so it sounds like the discussion about charitable contributions and the deduction that you get for charitable contributions is really limited to those who itemize.
Correct.
Right. So for those who itemize, then the rules have changed a little bit. So let's talk about that.
Well, so as with anything, I just said correct, but there are exceptions, and there is a new exciting one this year. Actually, it's it was new a few years ago, and it's been reinstated. Okay. So if you, I know this, stay with me here, but if you are an individual who uses the standard deduction, mm-hmm. for most of the years in the past, in order to get the charitable deduction, you had to itemize.
Oh,
Okay. You have to, but now in 2026, you will be able to make charitable contributions up to $1,000 if you're single or $2,000 if you're married without itemizing.
that's awesome.
So you can take your standard deduction of let's say you're married, $32,000, and on top of that you can add $2,000 in charitable deductions. That's something it started during the pandemic. They gave you like $300 or $400, but now they've increased it for 2026 to $2,000 for married couples. So for the non-itemizers, I want to make sure they knew about that.
Yeah, that's fantastic. And by the way, this is how I know that you are called to do what you do, brother, because only you would say, I have an exciting new deduction to talk about. I love that. But it is exciting because from our perspective, the more we make, the more we give, right? We want to encourage people to give. I don't think many people have a heart of generosity, a heart for charity. I don't think many people would say, I give because I get the deduction. But for those who give, it's nice to get the deduction, right? You might as well save on your taxes if you can do so. So I love to hear that. That finally, gosh, especially in the middle of a government shutdown, Congress has really shown that it's in many ways not capable of governing. This is a nice policy. I like to hear about this because it incentivizes folks, hopefully, to give a little more.
Rich, I like what you said about there because my whole philosophy with taxes is just go ahead and do what you're going to do. Give, start a business, do all of that if you think that it will be successful for you and you will enjoy it. But then feed that information to me and let's make sure we're maximizing our tax deductions based on what we want to do.
Right. That's interesting. I hadn't thought about that in a long time, but when I was in law school at Emory, I took tax class as a third year, and the tax professor, in the context of talking about deals, mergers and acquisitions, that kind of thing, he said, don't ever let tax drive the train, right? You do the deal and then figure out the way to do tax policy or tax, as a result.
Well stated.
Yeah, that's good. Hey, so with that in mind, then this additional charitable deduction for folks who take the standard deduction, do you think that is an incentive for people to give more? It seems like that's what Congress had in mind when they added that new change.
Absolutely, I think it is an incentive to give more. Unfortunately, a lot of people are not going to be aware of that.
Yeah.
For 2020, well, actually, it goes into effect 2026, so it's not going to impact 2025. So, podcasts like this make people aware of that. So if they want to give, there's a tax benefit. If you give $1,000, that's worth savings of $200 in taxes. And I always say, I'll take that $2,000 and take my wife out for a nice dinner. Even though food is going up, I'm going to take my wife out for a nice dinner, and that's a tax deduction that's well worth it.
I love it. All right, that's great. So for folks then who itemize, what do the charitable contribution rules look like for this year, 2025? Let's start with that. What do people need to know in the next 6 weeks?
Well, for 2025, nothing has changed.
Okay, good.
Of charitable contributions. When I talk briefly about tax strategies in just a minute, I'll talk about what to do in 2025 because what's happening in 2026, and unfortunately, I don't have as great a news for those who make charitable contributions. But essentially, there is now a floor to what you can deduct. So what I mean by a floor is that you can deduct charitable contributions over a certain amount. So in the past, you've been able to fully deduct, with some limitations, but just in general, you've been able to fully deduct everything that you donate. Mm-hmm. Beginning in 2026, and I'll talk about this in the strategies in just a minute, but in 2026, the IRS is now saying you can deduct everything over 0.5% of your adjusted gross income.
That's where the AGI comes back. Okay.
That's right.
0.5%.
So let's say that your adjusted gross income is $100,000.
Okay.
Let's say you have charitable contributions, let's just say of $5,000. In the past, you could fully deduct that $5,000. In 2026, you'll only be able to deduct $4,500 because of that 0.5% floor. So if you make $100,000, you contribute $5,000 to a charity, 500 of those dollars will not be deductible. So that's just something to keep in mind. I don't think it should drastically impact your tax strategy in terms of, your overall giving. Mm-hmm. But that is one key change to the tax law beginning in 2026. It's always interesting. Yeah. It's always interesting when we talk about tax cuts. It's like they give you something over here with the itemized, with the standard deduction, giving you that $1,000, but then they take away something over here. It's like, what's that really? But anyway.
Well, you're reading my mind. You're reading my mind, Jeff, because I literally was just thinking as I'm trying to process the impact of what you just said. Remember that part where I said Congress showed itself it could govern? I take it all back. Because that seems to me to be, and this is probably too lawyerly a phrase, but that seems to be a chilling effect, to have a chilling effect on giving. But you tell me, what do you think is the implication of that? Is Congress trying to incentivize people to give more than half, I guess, 0.5% of their adjusted gross income? In other words, make it count? Or are they trying to, what do you think is going on here? So
without getting in too deep into the weeds, I think that Congress passes a law, but you and I both know they don't always know all the details.
Fair enough.
Now, a lot of times those details are developed by the bureaucrats. Mm-hmm. And so the concept overall may be a tax cut, but some individuals, they may actually end up paying more. Yeah. A good example is the SALT tax deduction. Remember, the last few years, there's been a limit of $10,000 on what you could deduct for state income taxes, property taxes. There's been a ceiling on that. Fortunately, that ceiling in 2026 goes up to $40,000. So that's just a little side thing to our charitable contribution discussion. No, but I think overall, yes, the incentive is to encourage people to give more, but every now and then the government wants to somehow take just a little bit of it back.
So exactly. Well, because I remember going back even further, I guess it was 2017 and that tax law change where up until then, as a small business owner, you wanted to try and deduct every meal you could, right? Where you're taking clients out to business, where you're talking business with your coworkers, or maybe as an owner, taking your other owners out. But that all went away with 2017, right? Jeff, so let's go back to your hypothetical example with the family that's making $100,000. Mm-hmm. You mentioned that if someone's giving $5,000 because of this new limitation, again, which doesn't start until 2026, mm-hmm. It sounds like they will get to make the full $5,000 deduction as long as they give more than $5,000. Is that right? Correct. All right. So let's say, take that same example. Somebody's making $100,000. Now they decide to give away $10,000, right? Mm-hmm. The whole concept is the more we make, the more we give. So we're going to use that as our example. Now they're giving away $10,000. How much of that would be deductible?
Well, it depends on their adjusted gross income, right? So if $100,000, 0.5%, that $500 still applies. So they'll get a full write-off of $9,500.
Gotcha. So it's basically kind of a discount off of your deduction.
That's correct. That's correct.
Gotcha. Well, do you think as a result then because I know there are some things you wanted to talk about in terms of what to do now in 2025. Do you think that's an incentive for folks to give more now?
Very, very good. So just a couple other things.
You're a good teacher, man.
Yeah. No, this is good. So just a couple other things real quick on changes to charitable contributions, just real quick.
Oh, yeah.
Those in the 37% tax bracket, you're going to be limited to charitable contributions of 35% of your AGI. So there are people who give big, so there are some limitations there.
Gotcha. So there's a floor, and then for 37% bracket, there's a ceiling.
That's correct. That's correct. So you just got to, that's just something to keep an eye out for. And then as far as corporations, instead of it being 0.5%, it's 1%. So if you are a C corporation, you donate $100,000, you get everything. You donate $10,000. Everything above that 1% is deductible. So with a corporation, the deduction will only be $9,000 instead of $9,500 for an individual. So just something to keep in track. But now here is a piece of good news, Rich. When we talk about tax credit for scholarship funds. So many people are aware that in Georgia, and I'm in Georgia, so I'm talking about specifically Georgia, we have a program in its simplest terms where you can take some of your state tax dollars that you have to pay and contribute it to a school.
Oh, that's cool.
Yeah. Georgia's had that for many years. The question is, though, has always been, well, how does that impact my federal tax returns? Okay. And so this new tax law starting in 2027 allows you can take it for your state and your federal. Whereas in the past, you can take it for your federal, and it's up to $1,700. It's a tax credit. So it reduces your taxes dollar for dollar.
Right off the top line. Yeah.
We're going over this really fast, but I want to put those little seeds out there so people can know what's available to them. And then in terms of the strategic planning, which is where you started to go, we said, okay, well, wait a minute. What's happening in 2026? Should I think about that at all in 2025? And the answer is yes. If you have some donations that perhaps you normally make in January, go ahead and accelerate those to December. That way you can get the full deduction in 2025, whereas in 2026 you have these floors that you have to comply with. So accelerate deductions. If you don't itemize, but you want to take advantage of the $1,000 in 2026, then I would say decelerate your charitable contributions. If you're planning to make $1,000, if you make $1,000 donation every December of $1,000 to some entity, you might want to delay that until January of 2026 this year, so that you can get that write-off on your taxes. We don't want to delay helping people, but it's just a tax strategy to think of.
Well, and certainly it's a great point. You're exactly right. Though, like we talked about a few minutes ago, the whole point is to give and to give generously. But if you're going to give routinely, then it may make sense to hold off for 1 month, push it to the next, just to be able to take advantage of that deduction.
If you utilize the standard deduction, yes.
Gotcha. Jeff, we in this context of our conversation about taking these deductions, I think most people, including me, are having in mind financial, right? Where you're making writing a check, donating cash, or using a debit or credit card for financial transaction. How does this apply to donating? I think the legal phrase is in kind. How does this apply to donating a box full of canned goods, right? We were talking about donating to food pantries and the interruption of the food stamp program this month. When someone takes a box of food to the food pantry, is that deductible?
If you can get them to issue you a receipt for it, yes.
Gotcha. Okay.
Yeah, you definitely want to make sure it's easier. And that's what I was going to say also about your charitable deductions. Always make sure you get a receipt and you keep track of of the financial transaction, either with a canceled check. I know no one writes a canceled check anymore, or writes a check anymore, but either with a canceled check, or make sure you've got your bank statements that show that you actually made that transaction. I've been through audits, IRS audits, and with clients, as well as I've been audited. And they said, well, Jeff, you're giving a lot of money. It's not enough for us just to see this piece of paper that says what you give. We need to see the canceled checks. So I had to gather all of that information. I was not expecting to have to provide that. Yeah. So as much support as you can have for each transaction, you want to make sure that make sure you have the proper support and documentation to be able to prove to the IRS this is what you did. And the key thing with IRS audits is if you got it on paper, they'll accept it.
Okay.
Because they can't go back and prove what you were doing at A, B, or C time. But if you've got documentation that says, even if it's just a handwritten note, if you've got documentation, then you're in good shape. But as far as donating goods, sometimes you can get the charitable organization to say, on this date, so-and-so donated X amount of money in goods and services. Now, you deduct that differently on your taxes than you do a cash deduction. But again, something to talk to your CPA about.
Gotcha. That's fantastic. Well, just because I'm thinking not only of what we donate, having just moved to Florida 3 years ago, we took a whole bunch to Goodwill, to Salvation Army, to American Veterans organizations and the like. And man, we were just bringing stuff by the carload, and they'd always just hand me a blank receipt. I'm like, all right. So I'd stand there and fill it out and write down everything that we just donated. But that's a great point, that you got to have something in writing to be able to justify it down the road. With that in mind,
I want to address something there really quickly.
Yeah.
So when you get that receipt and it's blank and you're like, well, what do I do with this? It's important to know what to do with it. So let's say I bought a suit I wear expensive suits, let's say. So I bought a suit for $1,500 3 years ago. Okay. And then I wear it twice. It's still in good shape, donated to Goodwill. Most people say, well, I paid $1,500 for that. That's what I want my write-off to be. No, it needs to be the fair market value of that suit when you donated it.
Not when you acquire it. Okay.
When you acquired it. So what I would do is just, use some type of reasonable discount. Say, okay, maybe I could resell that suit for $500 now after 3 years because it is used. Mm-hmm. That's the amount you want to deduct. If you try to deduct the full $1,500, the IRS is not going to allow you to do that if they do.
Gotcha. That's a great point. And presumably the same would apply to everything, unless I'm just thinking of our friend Marie that I mentioned to you earlier, who's a terrific Christian capitalist and lives here on the Emerald Coast. She is regularly, and by regular I mean once or twice a week, going to our local grocery store, going to Walmart, getting groceries and taking them to the food pantry. There, it seems like at that kind of transactional level, if you bought it and donated the same day, there would be no discount, right? You just can deduct what you pay. Okay.
Correct. Yeah, and I would recommend, even in a situation like that, keeping a receipt of when you bought it. So you can say, okay, I took this, I donated, that person gave me a receipt for it, but also here's the receipt for what I paid for it to show that those match up. I think that documentation would only help you in case of an audit.
Gotcha. And just to loop back, Jeff, because I want to make sure that I got it right, loop back to kind of the high level. So for those who take the standard deduction in 2025, is there any additional deduction for charitable contributions, or does that not begin until 2026?
It begins in 2026. Now,
got it.
When we go back to, if we're talking about 2021 or 2022, there was a $3,000 amount that you could deduct even if you didn't itemize. Wow. And I'm saying that because there might be some people who, still need to file some old taxes.
Yeah.
For 2024 and 2025, there's nothing like that. So it's not going to impact you in 2025, but certainly that's what we talked about, decelerating. If you're a standard deduction person, decelerating that December contribution to January so you can take advantage of that new law that goes into effect.
Gotcha. Jeff, I want to switch gears on you to go back up to the satellite level, maybe even higher, because as we're talking, I'm thinking of the times that we lived in Atlanta. Rebecca and I lived there for almost 30 years and raised our children there. And there are certain parts of Atlanta that are really impoverished. And I remember, especially for whatever reason, 2022 was a tough year in particular neighborhoods. I taught this class at Emory, as you know, in Decatur, in your part of town. But getting off of the interstate right there by the Georgia State Capitol, by Grady Hospital, and getting on the Freedom Parkway, you cross the boulevard right there where the Martin Luther King Civil Rights Institute is. And that intersection, for whatever reason, which is 4-lane divided, intersecting with a big 4-lane road, had droves of people asking for money. Mm-hmm. And at one point, I remember in the spring of 22, as I was driving to Emory to teach the class, there were two people at a time walking between the cars that were parked at this red light. And that wasn't just on the part of the road heading into Decatur and heading towards Emory. It was the other side, and then both sides on the boulevard. So it was like a total of 8 to 10 people working that intersection and asking for money. I mention that because this gets to one of my big issues, which is the deductibility of gifts to an individual who's impoverished. As a Christian and a follower of Jesus who doesn't stutter when he says, give to those who beg, I say, yeah, that's what we're supposed to do. Having said that, I have concerns about safety issues of doing that. And even in towns that we regularly go to, like Phoenix, where we visit our son in spring training, San Antonio, where my parents live, there are signs out from the municipality that say, please don't give to those who beg from you on the sidewalk. Mm-hmm. Refer them to municipal programs to assist the poor and homeless. That's a big old can of worms, but I'd love your thoughts on that about first of all, should people get deductions for handing cash out the window to somebody at an intersection? What do you think about that?
Well, of course, the IRS law says it's got to be a designated 501c3. So
fair enough.
You have to do fully out of the goodness of your heart. And Rich, it's interesting that you mentioned this because I've actually thought about, I wish I could come up with give each one of these individuals a Cash App account. I've even thought about setting up my own Cash App account. They could have a sign with the Cash App information on it. And then while I'm sitting there in my car, I can just donate to it and then, somehow figure out how to get that money back to them. I'm still trying to figure that out.
I love that. Well, and I'm so glad you're thinking digitally, Jeff. I'm not to interrupt you, but literally when we travel now, now listen, I'm a retiree. I'm a pastor. I'm running a podcast about working hard and giving generously. So I don't want this to sound as privileged and entitled as it does. But these days, when we travel and we get cash, it's not for the purpose of traveling. It's for tips. And frankly, when you go to a municipality, a big city, anywhere, it's to hand to people on the sidewalk who are asking for money. I love the idea of having a Cash App that will allow somebody to receive those funds because in particular, I'm thinking last December we went to New York and went to Times Square to celebrate the Christian Capitalist being number one on Amazon. And man, every 5 feet, there's somebody asking you for something because they know that's where the tourists are. So the IRS policy is you can only get a deduction if it's a 501c3, a tax exempt charity. Do you think that should be the policy? Is there any way that we could ever have gifts to individuals like this in the sidewalk or in Times Square? Any feasible way that would be deductible?
I would love to do it. Of course, the IRS is going to say if we open it up like that, it's going to be abused, right? So I wish we could do that. And
even if you said to the guy at the Times Square or there on Freedom Parkway, you give him $20. Hey, can I get a receipt? It doesn't work that way, right?
It doesn't quite work that way. Well, I think I mentioned this last time, but the other thing that I do is I'll go buy gift cards to McDonald's or Chick-fil-A because sometimes when we give money to people, we're worried about how they're going to use it. So I'll buy a $5, $10 gift card, just have them there in my car, and then I'll wrap it in a little brochure that talks about the love of God. And so, hopefully, not everybody's good. They're going to go right toward the money, but at least I know that if they're using that, hopefully they're not selling it. If they're really hungry, they'll go use it to feed them or their family. So those are some of the things I've thought about and some of the things I'm actually doing when it comes to helping those individuals that you were referring to.
Oh, Jeff, I love that. Let me ask you a question now on the flip side of the coin, because we talked about what a blessing it is to be a blessing to others. Mm-hmm. In that, I can't help but think about it as we're talking in that day where we were at Times Square last December. And for those of y'all who may not have been to New York City, this is a very busy place full of skyscrapers and billboards and flashing lights. And a ton of people go to Times Square who are visiting New York City. A ton of people are New York residents who stay there and want to meet those tourists and either sell them something or ask for a donation. So my friend, who's an attorney and works in a skyscraper nearby, came over and took pictures of Rebecca and me in front of our billboard. It was awesome. And then we went out to lunch. Rebecca and I decided, well, let's get a New York sandwich, whatever it was, pastrami on rye, right? But then we couldn't finish it all because it was such a significant sandwich. So I took the half that we hadn't eaten, wrapped it very carefully because I knew somebody was going to approach me in Times Square. And Jeff, don't you know, the first guy that I met, he was like, man, can I have some money, please? I need to go buy lunch. I'm like, I'll do you one better. Here's a still hot half sandwich from this deli. Literally, we could see it, right? It's 3 blocks down. Here's a sandwich from this deli. I'm happy to just give you lunch. He's like, no, man, I want money, not sandwich. I'm like, sorry, man, I don't have any cash. Sure enough, 15 feet later, the next guy was like, thank you so much. This is awesome. And literally started chowing down right there. So what do you think about what people should do when they're feeling generous and giving, but the person who's the recipient doesn't express gratitude or refuses the gift? What has your experience been with that?
I'll go even one further with you. One day, I don't know if I told you this before, but I was on Memorial Drive and I had some food from work, some leftover food in that extra box lunch, essentially.
Yeah.
So I saw someone in need and I did a U-turn on Memorial Drive to go give them the box. And come to find out, it was a policeman sitting there, and I found out I'd made an illegal U-turn and got a ticket.
Oh, no.
I was like, yeah, I'm trying to help somebody. And I told the policeman that. He's like, okay, well, here's your ticket anyway.
Wow. Literally no good deed goes unpunished.
Exactly. And of course, once I was through with the policeman, I couldn't find the guy I was looking for. But that's okay. Rich, in any, when you're a lawyer and you're going after new clients, some you're going to win and some you're going to lose. Right. And you knew that the ones that you did get would help feed your family and help support you and be able to give and things like that. So, there are going to be some losses. Maybe you only get 2 out of 10 prospects, but those 2 out of 10 help support your family. I think it's the same thing when we talk about giving. That not everybody's going to appreciate our gifts. I've been the victim of that many times, Rich. I'm trying to help somebody and they're like, that's all you got. And they just walk away and they take the money and they walk away. And so
right.
My prayer is always that, Lord, help them to find what they need. And at the same time, make that money go to use to help them feed their family. That's all we can do. We open our hearts, we do what we can, and we ask the Lord to bless them and to bless us as a result.
Yeah, well, beautifully said. Beautifully said. So, Jeff, as we wrap our discussion of giving to the poor and needy, anything else related to tax law changes that we need to discuss that's on your mind?
Now, again, I want to reiterate, talk to your CPA, your tax preparer. I want to encourage everybody, I think as I did at the last one, to do tax planning. You don't have to be wealthy. You don't have to make $1 million. You don't have to make $100,000, but make sure that and the tax planning not only helps you look into the future, but it helps you understand taxes better. So many times I have to find myself having to explain things. That's why even earlier in this podcast, I said, let's establish some definitions so that we can kind of speak the same language. So I just encourage everyone to do that regardless of your income level. Find somebody who can look in the future and say, okay, what can you do differently? Because even right now, you may not be making big money, but you got big plans. Yeah. And you want to know, let's do those plans, but let's also understand the tax implications of doing those plans.
I love it. Jeff, thank you so much for your time and wisdom today. We certainly do appreciate all of your expertise in not only taxation, but what it's like to be a Christian and try and not only give, but give generously. Thank you so much for your time today.
Thanks, Rich.
And for those of y'all who have enjoyed this episode, please like, share, follow, repost, do what you can to spread this message, especially because so much of it is time sensitive. Follow us on our social media channels, and of course, you can always learn more about the movement at christiancapitalist.life. And we'll look forward to seeing you next time on the Christian Capitalist Podcast, where the more we make, the more we give.